Diane, when does the Fed worry about the yield curve?
It's a very good question, and this is something where I think the size of their balance sheet really matters. And I think once we start to see this yield curve getting much narrower than it is already, it's already like a pancake, as you said, that's time to start thinking about it. My guess is they're talking about at this meeting what they should do in terms of the pace at which they should allow their balance sheet to run off, how rapidly they should allow that to go. They don't have to make that decision yet, but they have to be starting to map out that exit strategy on shrinking their balance sheet, which would hedge against the problems that we're seeing in the yield curve right now, but it also could amplify the problems for developing economies. This is really a high wire act for the Federal Reserve, balancing the need to rein in inflation that's being driven globally by the United States, but it's a global problem. The acknowledgement that this is a global inflation problem, but also that you've got developing economies having to compete with that where you could really cause a major increase in their interest service burdens going forward as they deal with defending their currencies. I think that's something that cannot be understated. It was a major theme at the Jackson Hole, Wyoming symposium.